Hey everybody, it's Murray here from the Property Collab, and today I welcome you to day number 12 of the 21-day property challenge brought to you by the Property Collab. And yesterday's challenge we looked at investment strategies, different types of strategies, and Daniel touched on short-term strategies. Things like fix and flips, that type of thing. And today we're going to be looking at long-term strategies. So what's the difference between a short-term and a long-term strategy? Obviously the duration is what the major factor is, but long-term strategy is there for creating wealth, for creating a legacy. And this is what we're in here in the property industry for, is to create a legacy for our future generations. It's also to create cash flow, to create financial freedom, to create passive income, all of those phrases that we hear about all the time. So I just wanted to touch on short-term strategies, because short-term strategies is a completely different setup to a long-term strategy. It's creating a different business model and a different set of systems and processes that you'd use if you were looking to build a business out of a short-term property investing. Things like trying to find properties, find a lot of properties quickly, get in there, get the renovation done, get it sold as quickly as possible. Very different setup to going on a long-term strategy. A long-term strategy has got a longer approach. It's a more calculated approach, because what we're trying to achieve is long-term wealth. We're not in this for the short term. We're not here in the next 12 months to make a lot of money in the term, but we're looking to grow a big portfolio so that over many years it will start creating money. So what I wanted to touch on here is different types of longer-term strategies, and I come up with two, and I'll throw in the third one as well, of different types of strategies. And if you hop onto our website at thepropertycollab.com and go to our blog page, there were actually a post that we put on there a couple of months back about back to the basics, it was called, and about looking at different types of investment strategies. So go head on over there and just go and read up on that. It'll give you a little bit of background as to what I'm talking about today. So let's look at the first one. The first one is for capital growth. We're investing for the long term for capital growth in property. So what we would do is basically we're going to go and buy a property today. It's worth R1,000,000. We hop in there, we buy it, we rent it out over the longer term, and then in 5 years time, maybe 10 years time, it's worth R2,000,000, and we realize the capital growth of those properties of R1,000,000 over the next 10 years, for example. Obviously that comes with a whole different constraint about taxes and capital gains and all the rest of it, but we won't dig into that too much right now. The second one is investing for cash flow. So typically you're now going to go buy a property. You've got expenses of R5,000 a month, which includes your mortgage payment, your bond payment, your rates and taxes, your levies or your homeowners association, and all of those costs that go into running it on a day-to-day basis, possibly things like maintenance or management fees, things like that. And then what we'd look at is getting a rental of that's higher than that. So let's say our expenses, all-in expenses, are R5,000, and we're getting R6,000 rental coming in. We're making R1,000 cash flow every single month, and that's the ideal. That's where we want to get to in terms of a cash flow strategy. So the ultimate in investing is to invest with both of those two, for capital growth and for cash flow. So what would this actually mean is finding a property that creates cash flow in a very high growth area, and you might think about things like new shopping centers being built, or the new car train stations being built, or things when there's high prospect of growth in the next few years, and you're investing that one over probably 5 to 10 years, where you're expecting that whole area to grow up, as well as making cash flow on every single month. And those are obviously very difficult to find, but they are out there. But you got to look, and you've got to get in there, and you've got to search for those type of properties, and you're probably going to be buying it well below market value to realize that cash flow every month. So the third strategy I wanted to touch on, and this is popularized probably more between 2000 and 2008, before the real estate crash happened in 2008, and that was something called negatively geared property. And this was Typically, you'd buy this in a new development. You'd go and buy an apartment in a new development, and every single month it's costing you money to have the tenant in the property. So let's say your all-in expenses are going to be 10,000 rand a month, but you're only receiving 8,000 rand rental. Every single month you're losing 2,000 rand. So this goes back to the capital appreciation model. Is that you're relying on the property to increase in value while you're losing money every single month. Now, this was a great strategy back before 2008 because property was booming. Property was increasing in value every single year. Nowadays, we're very uncertain about the economy. We're uncertain about what's happening in the world. So we're not 100% certain whether property is actually going to be going up in value. And this is why it's very risky to be investing with this type of strategy, with expecting or hoping that future capital appreciation will, future growth will happen in your property. So if you look at some good books, I'm thinking Cashflow Quadrant by Robert Kiyosaki from Rich Dad fame. He talks about his primary investment vehicle is cashflow properties. Get your money in your pocket right now. Let's not sit and hope and maybe one day we'll get some capital appreciation. If you look at what's happening right now with the coronavirus, no one can predict what's happening in the future. So instead of sitting there relying on future capital growth, rather look for cashflow properties today. That kind of brings us to the end of day 12 challenge. Hope you've enjoyed this video. Like, subscribe, drop some comments to us, and meet us on the forum. We'd love to see you there, forum.thepropertycollab.com, and let us know what you think about this video, and we'll see you tomorrow.